Assalamualaikum warahmatullahi wabarakatuh. This is Dia and I'm here to explain about chapter 4 in the accounting system book, which is the subject here is journal. Okay, and what is the importance of a journal? Here is journal is important because journal is the first step to record a transaction of the company. And there are some journal. The type of journal, there is two type of journal. The first one is general journal and the second one is special or specific journal. And for general journal, as you can see here, this is the example of the general journal. The journal, you have to have a name of the journal and then the page for the journal. Each page is included in this what is considered is a form for a general journal. First we have a date, A, B, and the description of the transaction, and then the evidence number. Evidence number means if it is the source document or the supporting document, it depends on the evidence. And then the account number. The account numbers depend on what transaction is recorded. And if we are recorded about sales transaction and we use general journal to record sales transaction, then it means that the account number will be, if the sales transaction is in cash, the journal would be cash to sales. So this is the number of the cash, maybe 1001, and then the sales maybe 21201, something like that. And then the debit and the credit. If the sales journal is a general journal, but sometimes general journal is, as we call it, general. This is a common general is not special journal. Okay, I will explain about special journal next. This is special journal. Why should the general journal be broken up? So broken up mean to be divided to some several journal. First, because to collect and to classify the same transaction. So you can see here, if you have so many transactions about cash and sales, like this is sales, cash sales transaction, so you don't have to make a general journal, because when you make a general journal, you have to put the cash, the sales, and then the account number, maybe the cash 1001 and then the sales 201 maybe, and then you have to do it many times. But with special journal, you can make it to the same column, so you don't have to type or to write this kind of thing. And then second, reducing bookkeeping work to ledger. This is meant by, it means that when using a bookkeeping, we can do the journal by posting it into a ledger. I will explain later about this one. And then allows recording transaction to a journal for multiple people. It means that when you make only one general journal, so there is only one employee who can manage this general journal. But if you divided this journal to something like, this is sales journal, and then this is purchase journal, and then maybe cash receipt journal, and then cash disbursement journal, and then you can divide the employee to take each one of this journal. This you can allows recording transaction to a journal for multiple people. And then creating internal control. So you can see here, if you do the sales transaction as a specific journal or special journal, you don't have to type it again and again, so it will reduce the mistake. If you mistake something, like you type it as a credit sales journal, you will type account receivable to sales but you make it wrong as a cash journal, also cash transaction, cash sales. So you type it cash to sales, but the actual transaction is credit sales. You can make a mistake like this one if you do it as a general journal. But as a special journal, you just have to, because the special journal have a column who said this account receivable if this is for the credit sales journal. So you don't need to make a mistake about that. Okay. Next is the basic principle to understand how to design a journal. The first one is a sufficient number of journal. So you have to understand first how many transactions, what kind of transaction that the company has to record, and then you have to make each kind of transaction into the journal. And then since the journal has to make an account number, as I said before, cash maybe 001 and sales maybe 201. This is the account number. So when you make a specific number for journal, sufficient number of journal, you also have to make a sufficient number of account number. And then journal is used to separate transaction in certain principal categories. This is if you want to include each type of journal to the special journal. Or if you only use a general journal, you can separate the transaction. If you use the cash, the general journal, you use the cash, so you use to to see the code and then to sum how many transaction using this code number 001. Okay, and then use the column journal. As you can see before, it is more easier if you use the column like this one, because you can see that if your transaction is about, maybe we can say it here that it is in 1,000 rupiah maybe, and then you know if you write it here 2, it means that this is 2,000, or if you write it 22, it means that 20,000. This is kind of column that you make to make it more clearer when you make a journal. Okay, next is column names in the journal must match with the name of the account in the general ledger. So you can see here the column name. So the column name about this one is the account number. Each account number have their own general ledger. General ledger is buku besar, and then each account number have its own general ledger, something like that. And then next, column in the journal are used to collect number that will be summarized in the respective account in the general ledger. So if you make a special journal, which means that there is what is it? Like this is for the cash. If this cash sales special journal, and then the credit will be sales or penjualan. So you have, if there is a date, this is the date, and then this is the description maybe. So you have to summarize each of this column, and this summarize will be posting to the general ledger, the account in the ledger. Okay, and then as much as possible, journal should be designed in such a way that copying information from source document is kept to a minimum. It means that if you make a general journal, you have to copy time and times again. Frequently you have to copy each transaction. But if you use the special journal, you don't have to copy it. You just copy the number or sometimes the description, and then you don't have to copy the account number. and then the description of the account number. And then the last one is when you design a journal, you must see the relationship between certain source document and the journal must be established so the accountability of the correctness of the information can be determined. As you can see in the general journal, you can see there's an evidence here. The evidence will be related to the account number. So you may make a form as in the chapter 3. In the form you may take the number for the sales cash, maybe SC. SC means sales cash and then the number 001, something like that. Then the evidence number would be SC001. It means that SC means sales cash. This is only for to make it easier to understand what kind of transaction the company is gathered. So to determine what kind of information is gathered. And next, the type of journal, and you can see here there is the type of the special journal. The first one is sales journal. Sales journal is the journal used to record sales transaction, both credit and debit. Credit means this is for sales transaction. Debit means this is for return. The return of sales transaction. If the customer is not satisfied with its merchandise or with the good company sells, so the customer may return the merchandise back to the company. As you can see here, this is only for the sales journal. You can see here also there is a date, the description, the evidence number, and then this is the account receivable. It means this is for the credit sales. And then for the cash sales, you just type the amount here. You don't have to type the account number. And then the miscellaneous, if there's something about when, sometimes about the return of the sales return. You just type the account number for sales return and the amount. And then the revenue is for the credit. So this is for the account receivable to sales or cash to sales, something like that. Or sometimes if you want to record a sales return, you use the miscellaneous page like this one. Or sometimes this is also for the discount for sales discount, And next is purchase journal. Purchase journal is like the name, it is used to record the credit purchase transaction. As you can see here, this is especially for credit purchase transaction. Oh, I forgot to make it in English. This is the purchase journal. Okay. There is a page, and then also the date, description, evidence number, and then the account payable. The account payable will be in credit because the debit will be the inventory. This is credit, this is debit. And then this miscellaneous or etc. other account may be involved in this. The next type of special journal is cash receipt journal. This is the journal to use the cash receipt of the transaction. You may have the cash receipt from the cash sales, or from the payment for the billing for account receivable. So you can see here there is a date also, description, evidence number, and then the cash. The cash, this should be the debit, and then the account receivable, this should be the credit, or this should be the cash sales. This is depend. If you want to make the cash sales in the cash receipt journal, so you don't need to make it in the sales journal. The sales journal, you have to you don't have to put another column for cash sales, since you make it in the cash receipt journal. This is depend on the company and what else, depends. Okay, next, this is the miscellaneous, is for the, like as I said before, maybe you may have a cash receipt not from the cash, the account receivable or the cash sales, but you may have the cash receipt from the return of the sales. And the customer, since the customer, not the return of the sale, the return of the purchase, I think. If you purchase something and then you return your purchase, and then you get back the money from the supplier. Now this is the miscellaneous for something, for that. And then next is the cash disbursement journal. This is cash out when you have to pay something, or cash outgoing. That's cash out. There is also a date, description, evidence number, and then cash purchase. This is for the credit should be the cash. This is the credit. And then account payable should be the debit. And then miscellaneous and the cash. Cash purchase is something like, oh, I don't think this is needed. Cash purchase if you want to purchase something, since in the purchase journal this is only for credit, but it is for the cash disbursement journal there is a cash purchase. So the cash purchase should be, if we bought it in cash, the cash purchase should be the debit here, and then the credit should be the cash. So it is for the cash outgoing. You have to pay something, the cash must be the credit, and then the purchase must be in debit, something like that. And then the miscellaneous is for the, as I said before, it is for the return of the purchase, or return for the, since it is the cash for the credit, you must credit the cash, or you must pay back the cash. So this would be about the return of the sales. If you paid by someone, someone buy from your company and you sold a merchandise to the customer or someone, so when the someone or the customer is not satisfied with the merchandise, he or she will send it back to the company, and the company have to give the cash back to the customer. So this would be for the return of the sales. And anything else. If you have to buy something like this about the purchase, I think it already in here. Usually maybe you want to buy a book or a pen, maybe you have to make it in this account number 2, in this miscellaneous column 2. Depends on the company. Okay? And next is the general journal. As you can see, this is almost the same with the first journal, but maybe you can make it here account number, and then, or another one is the evidence number. What kind of evidence you need to record in this general journal. So general journal is the journal that is not recorded on the special journal. So if the special journal is about sales, purchase, and then cash receipt, and then cash disbursement, cash out, disbursement. So what will we record in the general journal? We can record journal like when you have to record about the depreciation of the company asset, the fixed asset. So you can take it here each month. At the end of the month, maybe January 31, you have to make it here the depreciation expense to the accumulated depreciation, something like that. And the account number, you have to type it here, and then how much, maybe one something like that, 21,000, depends. Okay, this is one of the general journal that you make. Or maybe you can make it like when you have to pay the, I don't think that if you pay for the employee each month, you can use the cash disbursement journal. Anything else? Oh, maybe you want to make a journal for the tax, you can use it here too, like how many tax expense to the account tax payable, tax expense to the tax payable. You can also use it in the general journal, but if you want to pay the tax payable to the cash, you may use the cash disbursement journal. And then how method to record data into the journal? There are 4 kind of record. The journal generally in the form of the bound books. This is like the bound book. The book is bound with something like this one. And then this form of journal is often found in the companies that use a manual system in their books. So this is for the manual system. If you use the computerized system, you don't need a bound book. Okay. And the first one is with pen, second one is with bookkeeping machines, and then the third one with archive source document that serves as a journal, and then the last one is with the computer. So how do we record a source document with pen using a manual system? This is for the manual system. The source document may be recorded into the journal, and then from the journal it is recorded to the, no, this is not recorded, this is posted. This is posting, this is recording. Okay, difference between posting and recording. If to record, this is to record the source document, and then from the journal you have to post it to the general ledger. This is use it with pen. Next, it's used with the bookkeeping machine. With the bookkeeping machine, the information in the source document is copied in a journal using a bookkeeping machine. So you don't need to use it a pen or a pencil, but you use it is called mesin pembukuan, bookkeeping machine. So the source document is typed into the machine, and then it's automatically input the journal and the subsidiary ledger, and from there, from the journal, and then it is recorded or posted in the general ledger. So as you can see here, journal are obtained from producing source document and posted to the subsidiary book. So what is the difference between general journal and subsidiary journal? General journal is all account in the company. So if you have like 40 kind of account, so each account is in the company, it means that one is in the balance sheet and the other one is in the income statement. So any account which is in the balance sheet or in the income statement, it is called general ledger. So all account in the company means all account is divided into the balance sheet and the income statement. And the subsidiary ledger is the account which is described in detail the account in the general ledger, such as if in the general ledger and in the balance sheet you have account receivable, and in the subsidiary ledger you have account receivable of PT Agung maybe, and then account receivable of PT Abadi. It depends how many account receivable or how many sales you have to the customer of the company. So the subsidiary ledger is the detail of the general ledger. When the subsidiary ledger is the sum of every general subsidiary ledger is recorded in the general ledger. So you have to make it this like a check between the subsidiary ledger and general ledger. The sum of each subsidiary ledger, it will be the same with the sum in the general ledger. Okay. Next, with the archive of the source document that serve as a journal. So as you can see here, the source document is filled out temporarily, and then when the time comes, like the source document archive function chronologically as a journal. So the source document is treated as a journal, and then when it is needed to make it to post it to the general ledger. Sorry, buku besar is general ledger. I forget to make it in English. And then you have to make a summary for the source document, and then make a recap of the source document. So if you have like this is maybe 10 sales cash or cash sales. You have 10 cash sales, so you have to make it to what's it? I forget in English. So you have to make it to the one document, which is this is the total amount of the 10 cash sales, and then you can use it to post the general ledger. So it means that you can use it periodically. Periodically means you can make a recapitulation of the source document each month, maybe each week, depends how periodically you need to do it, how frequently you need to make a recapitulation for each transaction. Okay, and then the last one is using the computer. Of course, this is a very easy one. With a computer, the data in the source document is entered in the computer system via the keyboard and then recorded in a transaction file that functions as a journal. So as you can see here, this is the source document. This is inputted in the terminal of the computer, and then it will be recorded in the transaction archive. And when every day you have to run updating, each transaction will be updated automatically. This is the master archive not been updated. When you run the updating running, the master archive will has been updated after you make the computer to run each transaction every day. You have to do it every day, because the transaction this must be record every day. But if you want to run it here, you may use it each maybe in batch. In batch means you can use it each week or it's 2 days, every 2 days, depends how many transactions you have to record. If for one day you have to record about 1 million transactions, so you have to make a run updating every day, because if you have to record a transaction 1 million, it will be very difficult to run updating for every week. Maybe a week it should be about 7 million transactions, and the data sometimes it not processed. It is not processed. It is not all the transaction is processed with the computer, so the computer is have a limitation too. The next is how we can design a special journal. So there is some step that you must do when you have to design a special journal. The first step is you have to study the characteristic of the corporate transaction or the company transaction. So the journal depends on the transaction in the company, and the journal is the engagement that starts from a study of the characteristic of every transaction carried out by the company. So you have to ask from the employee or from the document that they use when you want to design a journal, so you can understand the characteristic of every transaction in the company. Sometimes not many company use the COD transaction, so you have to know if the COD transaction is used in the company, or if it is not used, maybe there's a credit sales. Is it used with the credit card or with the something else? Depends with the agreement. Sometimes with the agreement between the company and the customer. It depends. So it is different for each company what kind of transaction they use. And then the second one is, after you know the characteristic of the company's transaction, you have to know also about the frequency of the transaction. If the transaction is frequently happening or frequently happen, so you have to make it as a special journal. Okay, if it is not frequently happen, you can make it as a general journal. Okay, the standard journal entry. After high frequency transactions have been identified, the next step is to study the transaction characteristic in order to able to determine the ledger account involved in the recording of the transaction. As you can see here, if you want to make a special journal about sales, I have give you an example before. As you can see here, you may use the cash sales as the cash receipt journal or in the sales journal. It depends. Or if the company has a very special customer, you may also make it another column here. The column for let me do it here. So the column for this is for the account receivable for customer A, customer B, customer C, and this is for else, etc. So on, etc. So if you have a the customer ABC is frequently buy from your company, you may use a column for this 3 customer. Okay, it depends. Okay, and then after that after you know how frequent the transaction would be, and then you have to design the journal. The standard journal is based on the column that should be included in the special journal. So the standard column should be a date, and then a description, and then the evidence number, and then the account number. Each journal has to have this description. First is the date, and then the description of the transaction, and then the evidence number. Evidence means it is from the source document or the supporting document, and then the account number. So you have to make sure that every journal has this one. Also there should be a debit or a credit, depends. Okay, so what is the function of the journal? The journal, there is how many? Only three functions of the journal. First, as a historical function, meaning that each journal is a proof of the transaction that is recorded in sequence based on the date of the transaction occurred. It means that if you make a journal, you have to make sure that you record it sequentially. Sequence means depends on the date that occur first. So if the sales transaction is happened in the first January 1, and then there's January 10, and then there is also January 20, so you have to record it first, and then second, and then third. So you can record it first. You record January 21st and then January 1. So you have to record it in sequence as a historical function. Second, as a record function, means that all transactions must be recorded in the journal book if there is a manual. Like I said before, you use a bound book, the book which is bound with something like a spiral. What's it? Something like spiral bound, something like that. Okay, and then the analysis function, meaning that recording in a journal is the result of analysis of the transaction, several debit and credit that affected account. It means that when you know a transaction, you must remember to analyze the transaction. Which account will be influenced by the transaction? Like if you want to pay your employee, so you have to make sure that the transaction is about paying the employee of their wage or their salary. Sometimes you pay the employee for their bonuses, so you have to make sure which account is affected by the transaction. If you pay the employee for their salary or wages, pay this one, you have to make this is the account for salary and wages is different. But if you pay the employee for their bonuses, this is also the different account. So you have to make sure what account is affected by the transaction. Okay, this is the function of the journal. Next one, I think there is all for the chapter 4 about a journal. This is also you have to try. This is a self exercise. You have to scan this barcode, or you can click this link and be sure that you do this exercise. And the question in this exercise is in Bahasa Indonesia, so it will not very difficult for you to understand. Okay, and this is the reference that I use for this tutorial. And next, this is thank you. And any question, if you have any question, please ask me in the class. And for now, I hope this is useful for you. Assalamualaikum warahmatullahi wabarakatuh.